Okay, let's go ahead and get officially started. Welcome again, everybody, to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest. I'm really excited about spending the next hour or so with you. I hope you are as well. In fact, my promise to you today is a pretty bold promise right out of the gate here. In this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. Put the right time, the right effort in, have the right plans in place, and build just the correct foundation. You're going to be able to do that. So that's my goal among many here today of my presentation. So I know it's pretty bold right out of the gate. That's what we're all about here at VectorVest. Again, I see a couple of familiar names in the box, but not many. And so let me introduce myself again. My name is Jim Penna, manager of retirement services here at VectorVest. I've been with VectorVest for about 16 years now. Prior to moving down to North Carolina, as I mentioned, I lived up in Connecticut, Norwalk, Stamford, Connecticut area. And prior to coming down here, I worked on a trading desk. Started on some smaller trading desks at a brokerage firm, a couple of other trading desks, and then finally for the 5 years before I moved down here, I guess it was 96 to 2001, I was working on a larger trading desk as a market maker. So I took my Series 7 exam back in 1992. So I've been in the business a long time. And just so you know, prior to that, maybe 3 lifetimes ago now, I was a police officer for nearly 10 years up in Connecticut. So I tell you that because if at any time during the presentation it sounds like I'm telling you what to do, and I get a little bit, blunt, straightforward, that's where it comes from. So keep that in mind as well. But anyway, I'm glad to be here. I am joined by my friend and colleague, Mr. John Marabu. He will be answering questions in the background. He'll come in at the end and when we have our Q&A. So if you have questions, comments, concerns, whatever it might be, you can type them in. I'm going to try to look, over while I'm doing the presentation. I try not to stray too much, but you type them in and we'll work on the questions. So let's quickly walk through our journey today, what I want to accomplish. We're going to start off by talking about the VectorVest 3Ps of investing. It's our model for retirement-minded investors, okay, or any investor really, but especially retirement-minded. Just going to discuss for a minute or two why this is so important, why we're here today, and what we're trying to accomplish. Then we're going to talk about how to protect your assets, right? Now, over the last 2 years in the market that we've seen, even after some of these small rallies, we see days like today, right? Over the last couple of years, protecting your assets, understanding how to protect and defend your net worth is very important. So that's what we're going to talk about here today. The next strategy we're going to talk about is important because once you know how to protect your assets, I'm going to show you the most effective ways to grow your portfolio with the proper stocks and at the proper time. Then we'll shift gears a little bit and we'll talk about generating income. Right? Generating income is an important part of retirement as you continue to build and grow your portfolio and not count on things like Social Security. And listen, it's great. You get paying to Social Security, you get paid, and that's wonderful, but it wasn't designed for you to retire on. The Social Security website itself says Social Security was not created for you for your sole source of income in retirement. And so that's why it's important to be able to generate income as well. And then finally, we'll open it up to any questions that you have. We'll spend some time on a Q&A as long as you guys want to. Okay, so that's kind of our setup for the day. Let's jump into it. If you could, turn off all distractions. Okay. Listen, I know you're not going to turn your cell phone off. Maybe mute it, silence it, whatever you have to do. Try not to multitask. Just for an hour or so. I don't want you to miss anything important here. Okay. All right. With that in hand, if you guys are ready, do me a favor, type in yes in the chat box. I'm going to be interacting with you. I want to make sure everybody knows where the chat box is. Let me know you're ready. Fantastic. And like I said, it takes a minute for him to come through, but everybody's typing it in. Thank you all. Breeze here. How you doing? Richard, Mark, Lawrence, everybody's ready. Okay. So the first thing I mentioned was talking about the 3Ps investing model. And what we say here, after working with retirees for the VectorVest has been around over 30 years. I've been here for 16 of them. And we found that the retirement investing model that most people have been taught is broken now, right? Because things have changed, markets have changed, uh, macro environment has changed. So we believe it's broken. However, it doesn't take a lot of effort. It's not hard to tweak it so that you can get that foundation, that footing underneath you again, so that we can fix what's wrong with the current systems, right? So once we fix it, we want your retirement to be on much more solid footing, and that's what we're going to talk about here today. So, what are the 3Ps investing model here at VectorVest? Well, the model we use, and which I believe over the years we have proven to work, is again called the VectorVest 3Ps investing model. Hopefully, you have a piece of paper, write them down, draw out the little pyramid with me. But these are the three core pillars that you need in your retirement plan. And the way we break them down are the 3Ps: profit, provide, and preserve. Let's start with profit. So, when I talk about profit, when you think of profit, when it comes to building and managing your portfolio, think of the word growth, capital appreciation. It's going to be the portion of your portfolio where assets are allocated to buy good quality, safe stocks that are rising in price in a rising market, right? To grow your net worth. We're going to talk about provide. When you hear me talk about provide, think of simply providing income, right? There are actually two sources or two types of, or two systems that are going to help you generate income that we're going to talk about here today. And then the final P, what I believe is the most important, right, is preserve. When we talk about preserve, think of protecting, ensuring your portfolio. Your hard-earned assets need to be protective. And I joke, I took that oath a long time ago to protect and preserve the Constitution. My new Constitution is to help you protect and preserve your net worth, your retirement money. Do that again. I did it again, John. I did it the other day too. Sorry, folks. I wasn't showing my screen, I guess. So we were just going through, I was talking about this. It's a rookie mistake. I've been here too long to do that. Sorry about that. Thank you, Richard, for typing that in. 3Ps investing model. This is what I was talking about, why this is important. We're going to talk about these three core strategies. We'll have our live Q&A. I'm so mad at myself right now. I talked about turning off distractions. We're talking about the retirement investment model. And this was the pyramid. This is what I want you to draw down with me. We have profit, provide, and preserve. And I talked about capital appreciation, growing your portfolio. I'm going to talk about a couple of different systems to generate a safe, steady income. And then, as I was just noting when Richard was kind enough to point out that I needed to click an extra button there, preserve, right? Preserve and protect your portfolio. This is the key, in my opinion, right? What good is profiting? What good is providing income? Growing your portfolio if you don't know how to protect it when the market turns against you, like we have seen over the last 2 years, like we saw today, even after the sort of rally we had last. Okay. So again, thank you, Richard. I apologize for taking an extra couple of minutes I didn't need to take. Let's talk about why this is important before we jump into these strategies. Okay, why is this so important, especially now, today, to talk about? As we saw, another rough day today, another hawkish statement from the Fed. There's so many different. I'm not going to blame it on any one headline, but there are a lot of macro headwinds that we are facing, and you need to be ready for them. And that's why this is so important to understand how to build and manage, right? It's important because maybe the recent downtrend has wiped away a chunk of your nest egg. And maybe you weren't prepared for what to do and not sure what to do next. If that's the case, what we're going to talk about today is going to be important for you. Your income source isn't big enough, maybe, to do the things that that you want to do, to have the retirement that you choose. Right? Our little friend here. That's what I used to do when I was his age, looking to buy a new baseball glove or a new football. Nowadays, it's to buy a new video game, but I remember feeling that way. It's very important to what we're going to talk about today as well, because we understand the impact inflation and how it helps to deplete your savings, right? Even though interest rates, at least they're helping a little bit, but our founder and mentor, Dr. Bart DeLito, used to have he called it the hurdle number, right? Where your returns really, even before you start thinking of the income that you're making, has to be greater than the current interest rates and inflation rates, right? So it's important to understand how we build and grow our portfolio here. And even a darker scenario here, we see all the time how a growing number of people above 65 still have to work, not because they want to, which if you do want to, that's wonderful, work forever if you choose to, but they do it because they have to. Now, we don't want you to be one of them for sure. Instead, with the right system in place, your outlook is a lot different. You'll be able to retire at least on time or even younger. And if you're already retired, you'll have the time and money to enjoy your retirement. Again, to live the retirement that you choose. That's what I define as a secure retirement. Retirement in the life that you choose to live. Okay. So the key to being able to do that, the key to being able to do that is what I'll mention a few times throughout our presentation is a strategic shift. You need to take that control of the things that you can control, right? Listen, there are some things we can't. We can't control the reaction to headlines that come in the market. We can't do that. But there are things we can control. We could be prepared for when the market moves against us. We have the proper stocks, whether it's for dividend or growth. So we're going to learn to take control. And I'm going to start with the first core strategy, which is preserve. Protect your assets. Right? Take control, and you can do this. So instead of worrying about the market falling, wiping away more of your nest egg, for those who remember back in the early 80s, the strategic defense system the president used to talk about. Strategic defense to protect your assets. That's what I'm going to talk about here. A lot of people get caught by surprise when the market drops. And then after it drops, right, what happens? You hear the people on TV and a lot of financial advisors, what they'll do is talk about what you should do now to try to get your money back. But they're never there to tell you what you needed to do and what you needed to do to be prepared before you suffered the huge drawdowns that a lot of folks have seen. Right? And all began back in November of 21, and it continues right through today. So when we talk about protecting your assets, we're talking about insuring your portfolio. Before we talk about the tools to do that, you need to know not only how to do it, but when to do it, right? You have to have that strategic defense system in place. You have to know when to do it. So I'm going to take a couple of minutes and talk about that. What I'm showing you here is what's called the market timing graph in the VectorVest program. Okay? We have a long footprint right in our VectorVest program. Again, it's been around forever. This goes all the way back to 1999. This is the VectorVest composite. Before I go any further, let me ask a question. How many folks who are in the room right now are currently VectorVest subscribers? How many folks here are currently VectorVest? Charles says, I am. Clay, Bruce. Glenn says, no, yeah, Glenn says he's on trial. Just takes a second. A lot of folks. Richard said 19 years he's been with Vector. So Richard knows what this. Right. So I haven't seen a no yet. All right. Well, that's wonderful. So you guys know what I'll be talking about here, and that's good to know as I continue the presentation. Thank you for typing that in. So then you'll understand then how the market timing works in our program. right? And, we've all been there. We've all bought what we thought were good quality stocks and watched it drop when the market dropped, right? Even good quality stocks will fall when the entire market is in a bear market or is in a downward trend, right? We've all been there. So I want to take a minute and zoom in on a few of the biggest market moves that hurt a lot of people in the markets and kind of try to learn from them as I set up the tactics you can use to protect your portfolio. So I'm guessing there are folks here in this room who experienced the bursting of the dot-com bubble. Okay, I was working on the trading desk then, 1999, 2000 into 2001. Our subscriber, Lynn, he had written to us then. This is going way back. He said, during the boom, I took 80 grand, increased it 5 to 6 times over. But in 2000, I proceeded to lose almost everything over the next 2 years. And he wasn't happy, as you can see. These are his words here. And he needed someone to blame. That happens way too much, especially in the last year or two, right? You make money during the uptrend. But as I said, if you don't know how to protect it, you give it all back and you spend years trying to recover those losses. Right? It takes a long time. If this, let's say this was a equity curve of your portfolio or even for the markets, it takes a long time to get that rebound, that renewal. If you allow this to happen, you've got to wait, right? For me, I do the numbers, it's the easiest one to do, right? If your portfolio falls 50%, what has to happen, right? It has to double. It has to go up 100% just to break even. That's what we're trying to avoid. Next, we'll talk a little bit about the 2008, right? The housing bubble. At that point, the average mutual fund in 2008 dropped 40%. And many people were like one of our subscribers, Robert, who lost 40% of his retirement and thought he'd have to go back to work and get another job after retiring. Fast forward. Now, this one was a little bit quicker. This was the COVID sell-off. That was February, March of 2020. Even then, the S&P 500 fell over 34%. And while we weren't sure, we didn't know, we didn't predict that this was going to happen. I'll show you evidence of the VectorVest timing signals and guidance telling you even before this to be careful and how to protect yourself, when to take action. And that takes us, into, again, as I mentioned, November of 21, November 22nd to be exact, when we got the confirmed down call, right up to the low in October of 2022. And yes, we have rebounded a bit, but nowhere near to the levels that we needed to go anywhere close to where we were back here. Market dropped over 30% in that time frame. Let me ask you guys again, I want to interact. Did your financial advisor call you leading up to any of these events to warn you? If you have a financial advisor, did he or she call you and say, hey, listen, market's looking a little rough, a little toppy here, maybe you should do something? If you had an advisor, did they call and tell you that? And it takes, like I said, it takes a second, but here it comes. Charles, Clay, Pawan, Richard, Lawrence, all typing in no. Right. Listen, not all financial advisors are bad. I'm not trying to do that, right? There are many who are very helpful in certain areas of financial planning. But even if you have one, hopefully you have the knowledge. And my goal here today is to give you the knowledge to at least know when you're looking over the shoulder, the proper questions to ask and let them know, listen, what are you doing? Anyway, it takes us right up to, to now. Many are still worried about what the markets. I know I am. When I say worry, I don't mean in a scared way. I mean, I'm I want to be proactive, to be prepared if the market continues to fall. Now, some people say you can't time the market. The people who say that can't because they don't understand the concept of it. When the real truth is you can't predict the market. You can recognize trends, short, intermediate, and long-term trends in the market. Of course you can. But what you can't do is predict the market. So when we analyze these trends, short, intermediate, and long-term trends, they give you the ability to know when to become defensive. Because again, you don't hear this information of when to be careful when the market's going down until it's way too late from the talking heads on TV. Very rarely, and usually when they do, it's pretty late in the cycle, they start talking about being careful. So you always want to be careful where you get your information from. So what I want to show you is using VectorVest guidance, in this case, using the proper guidance, how you can ensure your portfolio from never having that full collapse again. Now, there's always going to be some drawdown. There's always going to be some drawdown, but there's no reason to live through these major moves to the downside that we talked about. Let's start with just a little history here and how powerful the proper guidance really is for you. So I'm going to start back in the housing bubble crisis and all of the things that were going on here, the credit crisis. Back on November 2nd of 2007, VectorVest guidance, Dr. D wrote, confirmed down signal we received could be the entree to a long bear market. Okay. Don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. If you were, I don't know if you were a VectorVest subscriber then, but don't you think following that guidance would have helped that peak in 2007, especially as you look at a market timing graph since then? You can type it in. I know the answer. The answer is yes. Somebody type in yes. Certainly would have helped you, right? Let's keep moving. Now, here's what I was saying before. As an example, back in 2020, right? The pandemic, which we had no clue at this point on these days leading up to exactly what was happening. But days before the peak, we noticed warning signals in our market timing indicators. And on February 14th, before the collapse began, VectorVest said that there was a bearish divergence and it suggested that downside risk outweighs upside potential. Boy, how much clearer guidance can you get than downside risk outweighs upside potential? And that's a week before this sell-off began. And now I'm just going to click through these a little quickly as you see as we move through. Again, this is our market timing graph. This is the VectorVest composite strategy from February 21st. Prudent investors should not buy stocks. Aggressive investors and traders play the market with a bias to the downside. Right? That was on the 21st. We didn't say that here. Well, we continue to, but we said it back here. Right? 11:10. Prudent investors should not buy stocks at this time. 11:22. That's the day we got the confirmed down call. Prudent investors should not buy stocks at this time. Glenn has a good question. Again, I'm trying to go through without taking too much time on questions in the beginning. But Glenn has a good one. By going defensive, does that mean sell all equities on that day? And it doesn't have to, Glenn. It means maybe tighten some stops. It means maybe shedding some positions that you maybe have a good unrealized gain in. Right? Maybe you can shave some of those positions, if not sell them all. There's a lot of different things you can do. But I'm going to show you a great alternative right now, other than just simply selling all of your equities. That's always a possibility, at least trimming down your position. But perfect segue, perfect timing on your question, Glenn, because what we're going to talk about now is that first core principle or key principle that I said, to me anyway, is the most important, and that is capital preservation. Protect your account. Protect your net worth using portfolio insurance. So let's talk a little bit about that. This is again, a picture. Now, this is a recent one. This is a little over a year old from here. I took a screenshot just a couple of days ago to create this. These are our confirmed calls. And you can see how volatile the market's been. This goes back to August of 22 rather. What I want to do, and I could go through a lot of examples, but I don't have the time to do too many, but I want to show you by zooming in on this area and from that roughly 1.5 year peak, that's the high for the length of this graph. And then the confirmed down call came. I'm going to show you how even before that peak, we used a process of protecting our portfolio. Okay, so I'm going to zoom in there and concentrate on that time. What I want to do is share with you some actual trades that we did in our retirement coaching group using insurance policies or in reality, what we did was buy put options on the SPY, which is, for those who don't know, the ETF that tracks the S&P 500. Okay, we bought put options as a protection, as an insurance policy for our overall portfolio. Now, you could do that with other ETFs like the Qs or IWM, which tracks the Russell 2000. DIA, the diamonds they call them, tracks the Dow Jones Industrial Average. You can do this, and of course you can do it also in individual stocks if you choose, buying put options. For those who may be new to options, I don't have time to go into an entire option intro, but I'll tell you this, right? An option is a contract with strictly defined terms and conditions. If I buy put option, and in this case on SPY, it gives me the right to sell for one contract 100 shares of SPY at a certain price by a certain date. I have the right to do that. I don't have to. And understand this, that the value of a put option rises when the value of the underlying asset, in this case the SPY, falls. Much like an insurance policy, you have an asset, it's damaged, the value of your put option will help to offset the damage. All it is, you insure your home, you insure your car, your life, your health. You can insure your net worth as well. Ron, you can use the SPX if you choose to. There you go. Richard bought some 436 put options yesterday and is up 20% already. All right, let me show you some examples here so we can keep moving. Now, again, these were actual trades that we did in our coaching group. I'm going back to right before the most recent confirm down that we're still in. It was July the 20th. It was a Tuesday. That's when we have our retirement coaching groups. The market was down, I believe, intraday. I think we saw a red light or whatever was going on. There was, we had a nice run, and I do get worried. I get proactive, and I want to protect. The more green I see during a bear market, the more I want to protect those assets that are rising. So what did we do? We went out, in this case, bought 3 put options on the SPY. They were the August 454. Before you type it in, I'm going to give you the sweet spots for these because I know somebody will type it in. I like, when I do insurance policies for portfolios, I like to buy at the money puts. It could be slightly in the money, slightly out of the money. It just means that this is the strike price. If I sell a put at 454, it means I have the right to sell 100 shares of SPY, $454 per share. And I do them 30 to 45 days out. That's a guideline. Now, in this particular case, I paid $5.37 per share. This was with VectorVest real money. And it cost $1,611 to insure the portfolio right here that we had, roughly a $50,000 portfolio. And to Jose's question came in, for a $25,000 portfolio, how many puts would I need? I'm going to give you a really quick and easy calculation, right? If you have anywhere from 50 to 100 or less than 50 is fine. You should buy at least 2 put options on the S. At 100,000, look at it this way. If I have the right to sell 100 shares of SPY at 454, right, theoretically, and go to zero, that would be $45,000, theoretically, minus the premium I paid. So if I have a $100,000 portfolio that I'm protecting, I'm going to sell 3 or 4 puts. If I have 150 or 200,000, I'm going to sell 7 or 8, maybe even 10, and so on as you grow. Okay. So on July 20th, we bought those. What happened? Now, again, these are actual trades. On August 10th, this is a graph of the SPY. On August 10th, I sold them, the 454 puts at $9.02 for profit of, call it $1,100. Just to protect a couple of positions that we had in the actual VectorVest account. Later on the 19th of September, I bought 2 more. The SPY was at right around 441. It cost me $1,100 to insure, roughly 50 grand. What happened? In this case, it was just a few days later, sold those same puts for $11. It's 100% gain, 100% return, 3 days. Our risk management techniques had me closing that position out there. Finally, one more as the year went through, as we approached even up to now. Bought four more, 429 puts. This one cost $2,700. Basically, all I'm using is the profits that we had made to continue to pay for my insurance. This one, we still had made a profit, not as large. I got out on the big days here, made about 450 bucks on that one. Now, in the full sense of transparency, I will tell you that I take the time to hash them out here. I did buy some puts, and and the um, and the overall profit, there is an overall profit on it. I just want to be clear. I'm not going to sit here and guarantee you 100% winning trades. Can you guys hear me? I just got a flash that something had disconnected. Okay, is it back? Okay, I'm sorry. Yeah, I just saw some kind of flash that something disconnected. All right, please tell me where I lost you. I was talking about a couple of trades where we did give a little bit of the profit back. Did you guys hear me talk about that? I just wanted to be clear. We have strict risk management techniques, but I'm not guaranteeing 100% winning. Okay, good. I just wanted to be clear on that. Keep this in mind before we move on to the next topic here, right? It's insurance. I know it takes time, and I'm gonna share the quick analogy I like to use. If I open my bank account, my bank statement every month. This is the way I want you to look at it. Open my bank statement every month. I have car insurance. I use Geico. I have auto pay, right? ACH every month. I open it. I have a bunch of ACHs going out to a million different things. Make sure they go out. When I look and see that I paid Geico, I'm going to ask you to think about this. When you look at your car insurance and you made your monthly payment, are you angry that a tree didn't fall on your car this month? Are you angry that you didn't need to use your insurance to fix a damaged asset? Somebody type in. Does that make you mad that a tree didn't fall on your car? No. Right. And it shouldn't. Thank you, Jose. Richard. Anyway, that's the idea behind this. So if you give back a few bucks, all it means is that your hard earned net worth is insured and is not crushed. Okay. All right. And just to wrap that up as we move on, Elaine said, Jim, because of your teaching, I hedged my portfolio with puts on the SPY, saved a section of my portfolio. Elaine started with 835 bucks, started buying puts, and was able to profit or insure over 23 grand. He said, my portfolio is not only saved, but brought positive. Okay. So I'm going to take a quick sip of water. We're going to keep moving. How much would portfolio insurance have benefited you from July of this year, from November of 2021 to today? I've been talking about in the retirement coaching group. The more green I see, the more puts I buy. We had a big up week last week. You have to protect, defend your portfolio. Okay. The second strategic shift I want to talk about, you need to go, right? These are the things you can control. You need to go from being worried and unprepared, and worried in a negative way, as opposed to aware of what's going on and worry that way. I use worried as a positive. You have to go from being unprepared to knowing exactly how and when enter that strategic defense. Very important. All right, I'm going to shift gears here. We're going to go to the second P, and it's for profit. We're going to talk about um, now that you have your strategic defense system in place to protect your assets, you no longer have to be ultra conservative when you're investing because you know what to do and you're prepared now. So you'll be able to take full advantage of the market upturns to grow your portfolio. Right? In the past, you might have been plagued, like many people are, by buying stocks that didn't go anywhere or were too volatile and caused you to simply spin your wheels. So, to protect that, what we want to do is talk about buying safe stocks rising in price when the market's rising. It's the VectorVest mantra, right? Buying safe, undervalued stocks that are rising in price in a rising market. For our retirement minded investors, we want to look primarily at a stock's safety more so than anything else. Because while it's fun to hit the home run, buy that cheap stock and watch it, triple overnight or whatever, right? It's fun to hit the home run, but if there's any baseball fans out there, what happens to a home run hitter when he doesn't hit a home run? What do they do? There's got to be one baseball fan. I got to make sure my sound is working now. What does a home run hitter do when he doesn't hit a home run usually? Got to be a baseball. Yeah, there you go, Steve. Thank you. They strike out, especially nowadays in baseball. They strike out a lot. We don't want to strike out. That is not excuse the pun, it's not an option in our retirement account. Okay, so what we're doing is looking at buying the safer stocks, right? So if you're not seeing the returns you want, the answer is not to go faster, right? Because what happens is you end up trading or investing in a way that's totally against the rationale and objectives that you're trying to achieve. And that's the last, believe me, that's the last thing you want to happen. You don't try to become a day trader or short term trader to make money back from what you thought was a more prudent investment. I put this picture up because I have two boys. They're older now, but when I was teaching them how to drive, right? And I'm sure a lot of you can relate to this. If they were having problems, you didn't tell them to smash on the gas pedal and go faster. Tell them to slow down. So it's the same thing when you're building and managing your portfolio. And it all starts with a quote again from our founder, mentor, Dr. Bartolito. And Dr. D had talked about and quoted and said many times and wrote, good portfolio management starts with buying the right stocks. And Dave, that was a great reference. Dave Kingman, fantastic Met fan. Very nice, Dave. So it starts with building good portfolio management starts with buying the right stock. So we have a sports team up here, right? Again, I'm going to continue with the sports analogies, right? I used to use the 69 Mets, by the way, put them up here, right? It's just like building a roster on a team, right? You put the best players on the field or on the court or on the ice. And that's how you have a winning team. It's the same idea. You buy good quality stocks and you have a winning portfolio. Same idea. Now, when we talk about safe stocks, we look at things. There are some important factors that go into it. Earnings consistency, right? Does the company make money quarter over quarter, year over year? Company size, price volatility, debt to equity ratio, right? Does the company have a healthy balance sheet? That's an important factor. Dividend history. Has the company, they don't have to pay a dividend to be a safe, strong company. But if they do, they darn well better pay and grow their dividend. Because as Dr. D has written many times, that there's no bigger black eye for a company than to either have to suspend or cut or cancel their dividend. So these are the factors that go in to a very important indicator that we have in the VectorVest program. So what I want to do is take just a couple of minutes and I'm going to jump into the VectorVest program. And what I've done is brought up a watch list within the VectorVest program. It's called 40 well-known companies. Okay. I put this list together. It's made up of places where you shop, where you eat, what you drink, where you spend your money. I know you've all spent money at most of these places. Sure of it. I certainly have. So that's the idea behind these stocks. I'm going to assume that you're all familiar with these companies that you're looking at. Okay. They're not just randomly listed, they're listed or sorted, I should say, by the VST, the Value Safety Timing Indicator. The VectorVest program allows you to do that. That's our flagship number. These are our proprietary indicators: relative value, relative safety, and relative. So as a retiree, we can be even safer than using just value, safety, and timing, right? VectorVest has an indicator that focuses on every component that I just went through on that stocks checklist, safety checklist, that you don't have to. And that indicator is relative safety, RS, what we call it. So what I can do in the spreadsheet or this watch list is I could click on relative safety and I can sort it with the highest coming to the top or the lowest coming to the top. So I'm not saying go out and buy all 40 of these companies, not by any stretch. Well, all I want to do is take 30 seconds out and show you the power of the relative safety, the power of buying safe stocks. So first thing I'm going to do is change this date. You can do this on any date. It's not always going to work perfectly. As I was preparing this, I picked January 2021. I'm looking through good markets, bad markets. It's not a deep back test with risk management techniques in place. It's just a quick and easy way to help me show the power of relative safety. So the same 40 stocks listed just roughly, 3 years ago. I'm going to sort them with the lowest relative safety coming to the top of the list. Now, you're not going to buy all 40. I'm going to quick test the top 10. Right. So we have the ability to say, okay, if I bought them on that date and held them right to right now, right, I would be down 3.25% versus the S&P 500, which was up over almost 18% over that time frame. Okay. And just a quick look at it. This is what the lowest on a 0 to 2 scale. These are terrible RS numbers. Watch this. I click RS, same date. Now I'm taking the top RS stocks. I run the same quick test, and now I've outperformed the S&P 500. Again, there's no money management techniques in place here. None of that. It's just, again, a quick, easy way for me to try to illustrate it. Okay. Well, the real thing is that you're not going to just hold yourself to 40 stocks because they're well known or you spend money there. So what I'm going to do is take it even further, and I'm going to go into the stock viewer page, where back in January of 21, we were tracking at that point 7,200 stocks. So instead of just narrowing it down to 40, why would I do that? I'm going to narrow it down to the top stocks out of the entire database. I click on relative safety. Oh, let me again. And now these are my top stocks on that date. Well, quick test those. Right? So from a bigger pool of stocks, taking the highest ranked RS stocks, now I'm over 10% better, right? A significant higher annualized rate of return. That's just using relative safety in the quickest, easiest way. Anyway, it's my way of just trying to show you the power of relative safety. And I think it's important that you grasp just how important it is for these safe stocks. We have a portfolio that we track in our retirement coaching group. It's up, averaging about 22% annualized rate of return over the last 6 years. It's more than doubling the money. You know, they talk about doubling your money every 3 to 5 years. We can do that buying safe stocks. If you had that growth in your portfolio, how would that affect your retirement? That affect your retirement? I want you to interact with me. Go ahead and type it in there. Yeah, it would be fantastic, Jose said. It's very interesting. Carl said it would help. It sure would. Len, you're right. It would reduce a lot of stress, travel. You'd have major gains. And says that I have more spending money. That's right. So that's an important factor there. So here, the strategic shift. You want to go from that slow and stagnant growth, spinning your wheels, to that steady growth. Okay? And again, I'm not saying, there's going to be a straight line. There's always drawdown, right? There's always times where you need to be prepared to manage, but we want to make that ride a little steadier than being on that roller coaster. All right, let's shift gears one more time here and let's talk about generating income, right? This is the third P, providing that safe, steady income. You don't want to rely on just a pension or just Social Security to carry you through retirement. right? In order to continue or to live the retirement lifestyle that you choose, right, you need to open up some new income streams. There's two main ways to do that. First, I'm going to talk about getting paid with a quality dividend portfolio, right? Understanding how to find quality dividend stocks is very important, and it's not as easy as a lot of people think, right? Because what happens is a lot of folks will Google good dividend stocks or however you might do it. And there's a lot of information out there. And what I have found in my experience over a lot of years is that people struggle building a quality dividend portfolio because they just chase the highest yield, right? When you just go out to try to chase the highest yielding dividend payer without doing the proper due diligence, that's when things go wrong. So just a quick note in the VectorVest program, how you can use the power of market trend and finding the right dividend stocks. This is just one quick and easy way. A couple of days ago, I took a screenshot from a watch list that's pre-built in our program, found in the dividend payers folder called DRIP 25 Plus. For those who may not be familiar with it, um, um, DRIP stands for Dividend Reinvestment Plan, and 25 Plus means these companies have not only paid, but have grown their dividend every year for the last 25 years. Okay, some you may know them as the dividend aristocrats. I think there's about 67 dividend aristocrats right now. The difference is that to be a dividend aristocrat, you have to pay and grow your dividend every year for 25 years, but you also have to be trading on the S&P 500. So that's the difference here. We have a few more than 7. What I also have shown here over to the right is the very important dividend information that VectorVest provides, right? We have, first of all, this is earnings growth rate. Very important when finding a quality dividend payer. If the company can't make money, how are they going to grow and pay their dividend? Then we have the standard information of the dividend paid. That's an annual payout divided by the price of the stock. That's your dividend yield. But then VectorVest has proprietary numbers called dividend safety, dividend growth that we use. And this is the one indicator in the VectorVest program that's on a 0 to 99 scale. Anything above 50 is what we like to see. Dividend growth. And then we have a vector. We take yield, safety, and growth and make a vector on a 0 to 2 scale. So very, very powerful, right? Easy to look at. You can analyze them just by looking at the numbers. Again, we make it very easy to find those quality stocks. This GWW Granger, I use this, going back, this graph goes all the way back to 1997. I happen to own a small portion of position in this stock. So it's what we call the golden staircase, right? You can see how this company has grown its dividend every year. The golden staircase, we call it. Because earnings growth rate continue to grow, and the price of the stock, again, this goes all the way back to 97, continues to rise. These are the type of stocks that we want to build the quality dividend portfolio. Right? We have a model dividend portfolio, right? I talked about the growth in our dividend portfolio. We average, when you count the dividends paid, about 18% annualized rate of return. Now, again, there's some drawdown, of course. I can handle drawdown in the dividend portfolio because we're continuing to get paid. Trade there is, right? It's so safe. When I took my Series 7 back in 1992, the only option trade you could do in a IRA account was selling a covered call. Why? Because it added absolutely no risk to your portfolio. You already own the stock. The risk is inherent in the fact that you own the stock. You're actually mitigating risk because you're lowering your cost base. You're getting paid. So selling covered calls is an excellent way to generate income. Let's take a look at how they work. And again, this is a trade that we did. So I'll just start out in the beginning and kind of give the anatomy or the foundation of a covered call trade. We own the stock at $47 per share, give or take a few. Now, you can buy the stock and simultaneously sell a call for income. That's called a buy right. Right? When you sell a contract, it means you're writing the contract. Or you could already own the stock. Just real quick, remember that a call option, when you buy a call, it gives you the right to buy a stock at a certain price by a certain date. Remember, I said when you buy a put, it gives you the right to sell the stock. So buying a call is a bullish trade. In this case, we're owning the underlying stock and we're selling call against it. This is a great basic logical definition of what a covered call is. Understand that there are traders and investors out there who will pay you money today for the right to take your 100 shares of stock away at a specific price by a specific date. Someone's going to pay you today to take your stock away at a higher price. That's what a covered call. So again, in this example, bought stock at 47, decided to go out and say, you know what? I'm going to sell someone else the right to take it away at 49. They're going to pay me $2.27 per share. This is assuming we own one, and you got to own at least 100 shares of stock to do it. Okay. I own the stock at 47. Somebody's going to pay me $2.27. Right out of the gate, they pay me. That's my money. Now my cost basis on the stock is what, 44.73? Am I doing the math right? 47 minus $2.27. That's where I own the stock now. That money's mine. How much I get to keep of it depends how the stock and the position manages itself throughout. That's the anatomy of what the covered call looks like. What could happen? Well, let's talk about, these are theoretical examples at expiration. Now, of course, the stock could go down. However, the profits from the call you sold, remember, I now own the stock down at 44 and change. Stock falls, I do have a cushion there. I would still have a stop criteria and risk management in place, but the stock could actually go down a little bit and I could still make money. Stock could go sideways and I could keep that old $227 and decide, do I want to sell another call against it, or I could just sell the stock. And then finally, the best case scenario, when it's your objective to generate income, is having the stock go up and at expiration, having the stock called away. Remember, the buyer has the right to call away your stock at $49, which is fine. That was my objective. Take it away. So again, I said this was a real trade. What happened? Well, the stock didn't go up too much. It went up slightly from our purchase point, but not even 30 days later, less than a month later, we closed the position. I bought back the call, sold the stock. And again, the objective was to generate some income, and that's exactly what we did here. Generated in this one case, and remember, it's a process, not just one trade. Put these in, as a technique and a process, you begin to generate top of your dividends on top of your growth, more steady income. We had a student, name was Jerry. His words, he went from hit or miss with no methodology, right? Before he took some course from us, and then he went to consistent monthly income. And for him, when he started, was over 2% extra cash each month using the strategy that we taught him. So if you had a nice, safe, steady income coming in, I need to ask you, what would that extra income allow you to do? What would allow you to, I don't know, as you type in, I'll tell you a story. I had an old colleague who has since retired from VectorVest, and he used to say, this was great. He sold covered calls all the time, and his wife knew it. And he always told the story of the day he was in his office at home, and his wife called out to him, and she said, "Hey, you better go sell some covered calls. The refrigerator just stopped working. Go sell some covered calls." That's the beauty of that extra income. That was what worked for him. Richard wrote in, he would worry less. Takes the stress out. Right? I read these articles about, there's so many of them. I get all of the different tabloids and it says, well, I'm 65 or 68 years old. I have $500,000. Can I retire? Or how long can I live on that to retire? And it always struck me is that they always just assume that that they're done. They could never earn another penny. They could never grow that 500,000, and that's what they had to live on. Right? It always irked me, and it used to. So one more quick story. Dr. DeLito, I came to him one time, we used to go on the road, and I said, Dr. D, the question I get in some form or fashion, how do I keep from running out of money in retirement? And, Dr. D, in only the way that he could, looked at me and he said, James, just tell him to keep making more money. And that's when we started to put together all of the things that we're talking about. So the strategic shift there is uh, clearing the rust off that income stream, getting that steady flow. Dividends, covered calls are a great way to do it. So that shift is you'll shift from not having enough income to where you have that steady flow of consistent income, which again will allow you to continue living that lifestyle in retirement you chose or that you choose to live. That's the key, right? Retirement that you choose. Okay, so I know you guys showed up today for a few reasons. I believe you showed up because maybe your portfolio has pulled back again over the last 2 years. I know we've had some sort of rallies, but maybe it's pulled back. Maybe you're looking for that extra stream of income. Maybe that's why you're here. If it wasn't, maybe it is now. Seeing that it's possible. Maybe because of inflation and because of the pullback in the market, you've had to scale back from that retirement that you're not able to live, that retirement you choose. Or listen, maybe you're doing okay right now. Maybe you're doing okay, but you're not quite where you want to be. And because of that, you're here because maybe you don't have the plan to get there. So today, I hope that you learned that the first strategic shift, that it's possible to take control of your retirement when you have a clear plan. We learned that you can go from being worried and unprepared to understanding how and when to implement the strategic defense strategies that you need as the manager of your net worth. They're imperative that you understand how to do it. I hope that you learn that you see steady growth in your portfolio when you use the proper the mantra, right? By safe, undervalued stocks rising in price in a rising market. Again, there's always going to be some drawdown, but it'll look better when you're. And then I hope you learn you can go from not enough income and shift into that steady flow of income using both dividends and covered calls. And the main thing I hope you learned today is that the secret to build wealth, transform your legacy, and live financially free is to make sure that your retirement investing model includes the 3 P's of profit, provide, reserve. So that brings us to the obvious question that you should be asking yourself right now, really, is is how can I create this system in my retirement portfolio now? How do I do this? It's the question you need to ask. And there's a choice that you have. I believe you have a choice. And that choice is you can do absolutely nothing and keep doing exactly what you're doing right now. But, usually the same thinking will get you the same results. My fear is that you'll be in the exact same place this time next year, worrying if you'll have enough money or make it through. You can choose to do it alone. Maybe take some of the concepts I talked about here, try to do it by trial and error, but we know what happens when that happens. Done Carpenter. Or you can choose to do what our friend Jerry did that I talked about earlier and thousands of others have done. And that's get right to the solution, right? Why do all the work on your own when there's training available that allows you to bypass all the trial and error and get straight to the issue? So instead of taking the long way, road more traveled, learn how to take that shortcut. That way you get your retirement on solid footing as quickly as possible. Now, I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for 5 weeks, here's what I would get you to do. It's called the Retirement Portfolio Transformation. It's a step-by-step roadmap to a secure retirement. And I want you to please be patient. Stay with me for 5 more minutes. I want to explain to you this roadmap that we're talking about and share it with you. But before I do want you to understand that um, before we get to that, Albert Einstein once said, everything should be made as simple as possible, but not simpler. So it's important you understand that what I want to talk to you about right now for the next few minutes is not a get rich quick scheme. Okay? It's not some magic pill that's going to triple your portfolio in 60 days. Take some effort to get the results. You got to put the time in. You have to be serious about it. It's not hard to do, especially the way we lay it out for you. We put it together for serious people who want to plan, set up their retirement portfolio for success. Because as I said, transforming your portfolio, be able to build wealth for you and your family, transform your legacy. You create a better life for your children, your grandchildren. Somebody typed in about their grandchildren a little, and you'll have that financial freedom. The simple plan, again, it's called the Retirement Portfolio Transformation. Now, the easiest way for me to explain the course is just to quickly map it out for you. Again, thank you for sticking around. Stay just a few more minutes. I think this is important for you. It can change, literally change your life. So, using the 3 Ps, what we do in Module 1, it's called the Retirement Foundation Builder, right? Because this is where you'll get clear on your goals and objectives. Because remember always the old saying, a goal without a plan is just a wish. Right? You could want it and set goals for whatever. If you're just sitting there hoping, that's not a retirement plan. We're going to teach you how to treat it as a business, your retirement portfolio. You remember the SMART goals. I'm going to allude to those in this module. And we want you to create a vision statement. Then we're going to talk about the 3 core pillars. First, safe growth portfolio. We're going to teach you how to identify the right stocks, right? The best candidates, not only knowing the best stocks, but when to buy them. And then most importantly, how to manage them once you have them. An entire trading, or I shouldn't even say trading, an investment process, an investment plan for the growth portion of your allocation for your retirement portfolio. Okay. Then we'll shift gears and we'll do the same thing though. We shift gears to the dividend portfolio, but the same idea, finding the best quality dividend payers, building a risk management technique around those to generate that safe, steady income. Because you can't just chase high yield. You need to know how to identify the best dividend. And then again, very importantly, understand how to manage them when you do that. Now, in module 4, we hit the second part of provide, right? We're going to talk about our go-to option income trades, which is selling covered calls. And I didn't have time in this presentation to talk about selling puts, but we do talk about it in the module. It's very similar to selling covered calls, right? The risk reward portfolio for selling a covered call and selling a put option is identical. So we'll talk about that for those who want to explore that. There are other ways to generate income with options. And by the way, you do not need to be an options expert to understand this. I meant to say that earlier. You could be brand new to options, and we're going to show you exactly what the trade is, how to set it up, why you set it up, and how to manage it. You don't have to be an expert. It's one option trade. And then, well, actually, it'll be 2 option trades because we're going to teach you how it works, when to implement it, how to set it up and manage those. And then the second trade for options is going to be the portfolio insurance. And that's where we began the presentation, talking about the importance of preserving your capital. You got to know not only how to be defensive, but when to be. We'll talk about, I showed protecting the overall portfolio, but we'll also talk about protecting individual stocks. Growing your portfolio, getting income is useless if you don't know how to protect it when the market works against you. So by learning all of this at the end of the course, you'll know how to, again, grow your account, generate consistent income, protect your capital in all market conditions. That's the purpose of it. And that's Pretty much covers all the bases there. Grow it, generate income, and protect it. Okay. Here's what I'd like to do. I want to give you access to the full retirement portfolio transformation course. We've put the entire course together in a self-paced recorded atmosphere in the VectorVest University. Okay. It's recorded there. The modules are there with other resources, slides and cheat sheets and spreadsheets and things like that. In addition to the course, we've got a few limited time bonuses when you register today, right? So to help you implement the things you learn in the course, on top of getting the course itself, and by the way, you have access to that course for 1 full year. The first bonus, what we're going to do is give you the 5 live mastery support sessions. And I'll give you the dates for those in just a moment. But again, it's self-paced recordings for the course. But every Monday at noon, we get together for about an hour or longer if you guys have questions, and we revisit the module. We review it, we answer questions, and we illustrate it live during market hours. So we'll show you the trades and the process to protect and sell calls and to build your portfolio in live sessions. And if you can't make those sessions, it's not a problem, because I'll go in and show you how we archive them, but we record it and we archive it. And you have a dedicated email bin where if you have a question and you can't make the live session, we'll actually answer the question for you, and then you can watch the recording later. Additionally, you're going to get 5 weeks access to my members only group coaching sessions, where again, you'll see in real time how I manage our real money retirement portfolios. So each week you can watch me find, select, and set up our income trades. Right. So basically each week for 5 weeks, you'll see everything in action that we're learning in the course. Right. That's what we do in our retirement coaching group. The total value of all this, if you were to pay for it piece by piece, would be $4,300. Here's what I want to do. I'd love to do for you is give you full access to the course and all of those bonuses for only $595, what we call our early bird special, which is only good through Monday at 5 p.m. However, because you guys were kind enough to join me for this session, I'm going to knock off $100 on that. So if you order before we're done here today, and John and I are going to stick around and answer as many questions as we can, you're going to knock $100 off that. You're going to get it for $495. Right? That means you get the full course, 1 year access to this course. You get the 5 live mastery sessions that are recorded and archived with it. You get access to the VectorVest software for 60. If you're not a subscriber, which I think most of you are, you do get access to the software for 60 days if you're not a current subscriber. And you get access to the retirement coaching group for our weekly management, our weekly. The $495 price, again, will be good for a little while here until we're done. So take advantage of that price. You still can get it till Monday for $595, but take advantage, save another $100. So John was kind enough to type into the chat box, the vectorvest.com/transform. You can click right there on that link that's in the chat box, which I just did, and that will bring you to this page. And you'll see the actual original price is $995 for the course. So you can get it right now for $495. You can scroll down and take a look at all of the things that we offer here. Talked about all of these things: profit, provide, preserve. Again, if you're not a subscriber, you're going to get access to the pro. I know I'm scrolling through this quickly, but you can scroll through and read all of this. By simply clicking here, and that will take you to the registration page. So you can place your order here. Now, mine's a little different. It knows I have an employee account. It's going to ask you if you're already a subscriber. there'll be a tab there that says sign in. Just go ahead and sign in with your username and password for VectorVest, and it'll walk you through. If you're not a subscriber, it'll ask for your basic information and take you step by step from there. I want to show real quick while I'm here. These are the resources within the VectorVest University for the course. We have an introductory video, welcome video. Then we have module 1. And what I did here is for each module, instead of one long recording, I broke it down to each key principle. Okay. And then you'll see the mastery sessions. Like I said earlier, if you can't make the live session, you'll get the recording later that night. This is the one from August 21st. That day we did this session and archived it here. I can tell you that November 20th will be our first mastery session. That night, the recording will be there for you. Okay. Then we have all of the modules here as you scroll down. We do have a bonus module talking about generating income with credit spreads. Our friend and colleague, Mr. Ron Wheeler, nobody better at teaching credit spreads. We also have right now archived is our retirement coaching group. But again, and I'll show you the calendar in a minute, but every Tuesday at 2 p.m. Eastern time, starting November 20th, you'll be invited to the live version. If you can't make it, we record it and we post it here. Right now, you can get a glimpse of what they look like back. Resources here. If I click first on that button and then click on the gray tab, we have some cheat sheets, spreadsheets. You have slides to all of the modules here as well for your convenience. You have access to this site for 1 full year. $495. You act now. Thank you so much for taking the time. Now, oh, by the way, don't go anywhere yet. I'm not done yet. Still got questions to answer. Still a lot of people in the room. You know how they say there's no such thing as a risk-free trade in the market? Well, they're right, except here. Money back, 100% money back guarantee. Okay, that's how confident we are. You probably won't need this because if you take the course, you're going to see that it really is going to help you. Okay, if you do what we actually teach you. But if for some crazy reason it doesn't work for you, and you feel like we haven't taught you how to set yourself up for a secure retirement, just send us an email and we'll give you your money back, pay you back. That's how confident we are. You'll learn some great strategies. This gives you that peace of mind, right? To take the course, and if it's not what you wanted, we'll give you the money. There's an old question, right? An old saying, when's the best time to plant an oak tree so you can be sitting under it today to enjoy the shade? They say it's 20 years ago. That's the best time. When's the second best time? Who can tell me the second best time to plant an oak tree shade? Bree's got it. Yesterday. Glenn, Richard, today or now. Yeah, that's right. Same idea with your retirement portfolio. It's never too late. If you're close to retirement, if you just started retirement, even if you're in retirement now, been there. I know a lot of you have said you've been in retirement for a while. Never too late to enhance your ability to build, manage, and preserve your retirement portfolio. Now, here's another question you have to ask yourself, right? You go back to 2020, you go back to today, to the last 6 months. I showed it earlier from August of this month, last few months. How much did it cost you by not having the information that we shared today? If that number is more than $495, then let's fix this once and for all. $495, it's one covered call trade. Teach you how to prepare to protect your entire net worth, generate steady income, grow a portfolio to know how and when to buy the property. $490, if it cost you, and I'm sure it did, let's make it right. Let's fix it. $495 if you type it in. Go to that link again that John typed in. You could just click there. Charles said, never worked with options. It's scary. Yes, Charles, it is. It can be. I promise you, I will make it as clear cut and straightforward as I possibly can. Can't guarantee you that you'll be an options expert, but I can guarantee you every effort, every ounce of effort that I have to show you two of the most basic option trades there are, exactly how to implement and manage them, and how important they're going to be for your retirement future. Okay. Remember Robert from earlier, talked about him briefly. He said he just his advisor told him just write out the 2008 financial crisis, lost over 40%. Well, he started using VectorVest in March of '09. He's been with us forever. Market timing system, right? And technical and fundamental analysis of stocks. You could read through here. He's been relying on VectorVest ever since. Recouped all of his losses. So it can happen. It's happened. We've got dozens of these. I'm just sharing this one. That's the key there. He said, I realized I could not rely on others and that I had to take personal responsibility for my investments. That's that strategic shift, taking control. All right. Charles has typed in. I was just going to ask anybody who has gone in and signed in, was going to ask you to type in two words. Type in I'm in if you have signed up for the course here tonight. Charles said he did, said he just bought it. Said I'm counting on you. Charles, all I can guarantee, I can guarantee you every ounce of effort that I have and the 30 years experience I have and the power that I know exists in the VectorVest program to make you a better investor when it comes to building and managing your return. That I can guarantee. All right, let me share real quick before I bring John in to see if I missed any questions here. This is the calendar. So if you join right now, you get pretty much instant access. Sign in, join the course, and you'll get an email with all of the important things that you need to do to get access pretty much immediately to the resources I just showed you in the VectorVest University. You have access to them for a year, by the way. Now, we begin our mastery sessions. This is the calendar. Begins Monday at noon on November 20th. Going to be every Monday through that. And then this Tuesday is the coaching group, again, that you're invited to spend with us live. And if you can't make it, both of these are recorded and archived for you. So in case you're trying to map it out, again, don't not do this because you can't make the live session. It's just a few hours later you'll be able to watch. He's asking, does the class include live trades or not? The class includes, in the mastery session, me going in and showing you exactly how to implement the process that we're doing. So, yeah, I do live trades. For the course, there's two choices. I can do them in our live VectorVest buy right account where we do covered calls and buy protected puts. Thinkorswim, which is the platform I use, also has a simulated trading account. So I do go in and show in live fashion, whether it's simulated or real money, it's still the same way that you set the trade ups. We'll be using live broker platform to illustrate the trades that we do. Yes. That's what the live sessions are for. All right. John, I want to thank you so much for answering all of those questions in the background. It's very helpful. I ask you to pop in and let me know if there's anything I missed here. Yeah, and Bree, it may, like I said, it may be depending on the trade and when it is. It's possible I can do one in the live money. There's really absolutely no difference whether I do it in live money. Hey, John, how you doing? See, a couple just came up. Yeah. Yeah, it's a great question, and I'll give you the honest answer here is um, yes, and then there's a caveat on the option side of it. So, as you guys know, we have Canada, Australia, UK, European Union. We have, we're a global company. Building and managing your portfolio for growth stocks, for dividend stocks, the proper reading of the market trends using the color guard and the market timing graphs work across the globe. But when we start to talk about protective puts on the SPY, that's going to be on the US side. Selling covered calls in Canada, it can be done. The liquidity and the ability to do it is limited compared to the US side. Can you sell covered calls in Canada? You can. Can you buy protective puts on ETFs that track indexes? You can. The the liquidity and the choice to do that is not as strong, but you can do it. So that's the only difference. Yeah, no, I can do that. Yeah, no, I'm glad you brought that up, John. No, that's great because yeah, we do. Again, as I showed you, every Tuesday, and I hate that picture. I got to get a new picture. But we go through and we interact with our subscribers, um, uh, and our members of our coaching group. Again, which you guys will all be invited to. And what we do here is, if the market trend calls for it, we'll do a buy right. We'll do covered calls to generate income. We'll look at our live portfolios and see, do we need to buy put options? Is it time to protect our portfolio? Remember, I showed you those trades earlier. So we definitely do show the live trades and live account here on Tuesday. And again, John, thank you for pointing that out. So in the mastery sessions, we go into live account. And I really don't want you to think there's a big difference if I do a trade in the simulated account or if I do it in the live money account. Okay. Because we do both. And thank you, John, because that's a big point to have been made here. Right. So when we're in session, this is not in session right now. Okay. You're seeing my screen and I'm in Thinkorswim and I'm in the VectorVest program. And we're talking about, what puts were we buying? What calls are we selling against stocks? What looks good? What does so this is what it kind of looks like. Fairly new. We just started this, I don't know, a couple, 2, 3 months ago. Been a wonderful live coaching group that we're able to. Thanks, John, for pointing that out. Yeah, I commented on that for Charles. The short answer, the straightforward, blunt, straightforward answer is none. We've had many people take part in this course who had never traded an option before. Okay. You, just to understand what a covered call is, or to understand how I go out and buy a put option as protection and what the put option does. The modules will teach you. I will teach you even further and show you examples and actually do the trades live to show you the how and why. The why, listen, the why is important. You have to understand it, I guess. For me, oftentimes, the older I get, the less I care about the why. Show me that it works. Show me how to do it. Right. What's the old saying we used to have colleagues used to say, I go buy a car, I don't need to know how the combustible engine works. Combustible engine. I don't, I can't even say it, let alone know how it works. Combustible engine. I don't know how it works. I don't care because I got a warranty if it breaks down. Charles, we'll get information to you on how you access the coaching room. It should be, John. I'm exact 100% not unsure of, but we'll get you there, Charles. Don't worry. Yep. Stick around for a couple more minutes. There's still folks in the room if you have questions of any kind or about anything else we talked. Just, remember it's 100% money back guaranteed. You have access to the course for a full year. It's gonna save you and generate income well above that 490. All right. One last call. John, do you see anything or should we get ready to wrap up? We're going to wrap it up. Well, thank you for taking the time to be here. Charles, I look forward to working with you. See you on the 20th. And again, there's a dedicated email bin. If you have questions, type in there. All right, folks, I'm going to go ahead and wrap it up there. I want to thank you all for taking the time to be here. Again, if you change your mind, if you haven't signed up and you decide you want to, this will last for a little bit longer. But really, even at $5.95, you have till Monday at 5 o'clock to do that if you change your mind. Otherwise, thank you for taking the time. I'd look forward, if I don't see you in the course, do look forward to seeing you again. So, on behalf of John, myself, and all of VectorVest, please stay safe, stay healthy, and I look forward to seeing you next time. Bye for now.